What exactly are you looking for? What factors should you consider? And one of it, the most important, is the purpose for that loan. And that is where the convergence, the purpose for that loan. And that is where the convergence between the bank and yourself comes in, because Geoffrey has mentioned that you need to give them a proposal. Okay. So the proposal fundamentally is about what you want to do with this money. And for me, the most important thing to tell anyone who is looking for a loan is don't take money if you do not know what you want to do with it. What is the purpose? You must have a project. Because if you take the money and you have it, and then you are thinking of what to do with it later, by the time you decide what to do with the money will have started dancing on you. And of course, interest is being charged on idle money. That is bad for you.
Interesting, Mr. Thuku. Yes. We are in business. We are entrepreneurs. We just crazy about making money.
Yes.
And then the government tells us, oh yeah, by the way, you can get money now.
Yes.
But what should we do as business people to get ready for that money? Because you're telling us not to take money if we don't know where we are taking it. What is that readiness we should be?
Actually, the principle here is this. Never take money before, long before the commencement date for its usage. For example, now you have an opportunity to borrow, but most likely you can only put it in proper investment after the COVID, the lockdown and all that. So if you take money today, it will be in your account, interest will be charged on you, but you're not putting that money into use. So the moment you have identified the project, get to know when is this project commencing. If it is commencing next year, don't touch that money until a few days. Don't borrow until a few days. If you can be guaranteed that your loan can be processed within 2-3 days or a week, just apply that maybe 2 weeks to the commencement of your project. Don't take it months before, because you're still charged for it and it is idle money. That's a loss.
Beautiful. Interesting. Geoffrey, you wanted to add something before I get to Thuku on the other point?
Thuku has just mentioned a very beautiful thing. It's called purpose.
Purpose. Okay.
Purpose, yes. Don't approach a bank if you don't have a purpose for what you're borrowing for.
Don't approach a bank without a purpose. Please note that. And also, if you're not ready to use the money, don't borrow the money. Let me go back to Mr. Thuku. Please differentiate the different types of loans we have in the market. There's too much offer right now. And I'll give you a quick example. I went to a university somewhere to speak to students, and they told me one of the biggest problems they have is over borrowing. They have over borrowed.
Yes.
Of course, to do some small business. Some have borrowed branch, Tala, Mshwari, everything, and now they are almost all of them on CRB. What are these loans? What do they mean to an entrepreneur?
I don't know whether maybe Geoffrey, I may be going slower than your pace, and you will forgive me for this. There's a question you asked that I didn't answer. The issue of the loans from the SACCO, the banks, and the Shylock.
This is it now. That's exactly the same thing.
And this is a very important thing and factor to consider when you're borrowing. The question, the factor, because there are a number of factors. Actually, I have about 10 factors to consider before you take a loan. And this is one of it. This is one of it. Where to borrow? Where to borrow? Do you borrow from the bank, from the SACCO, or from the Shylock? And this ties up together with other factors. For example, do not ever borrow or take a loan, and especially sizable or meaningful loan, from an institution, organization, or a body that cannot insure the loan. Because insuring the loan ensures that in case something happens to you and you are normal or you are totally disabled, then the insurance is able to step in and cushion you or your family. For example, if you take a loan from the Shylock and tomorrow you have an accident and you are on wheelchair, the Shylock has not insured that loan. They will still come for their money. And that is a time when you need help, you need peace, and you need rest, and they're coming for their money. And that is where you'll find many people are in trouble for that. So when you're taking any sizable, meaningful amount, you must take it from an institution that is able to insure that loan. And that definitely eliminates the Shylock. Shylock is also eliminated by other factors like the interest rates. They have crazy interest rates. You know, somebody is telling you that they are going to give you at an interest of 5 to 10% per month. You know, that if you compound it per year is coming to about 60 to 120% in a year. You know, that's crazy. So if you take without considering whether you are insured, you are secure, and the interest rates, then you will be in trouble. Now, on the other side, between the bank and the SACCO, over and above the question of the interest rates, because definitely the SACCO's interest rates are lower. Remember, a SACCO is not supposed to be a profit-making body. It is supposed to be an organization that is made up of the members where they have put their own money into a common kitty and they are lending to themselves. So even if a SACCO does not make any profit and does not give any dividends, but the members have borrowed, they have gone and made the investment and returned that money, even if they don't get any bonus or interest at the end of the year, they will still have achieved their objective. However, the bank must make money. So the interest rates will be different, and that is understandable. However, the other difference is the fact that if you're not a member of the SACCO or you have not saved for some time, then you will not be able to borrow. So if you're thinking of borrowing now and you're not a member of the SACCO, the basic principle requires that you are a member for a minimum of 6 months. So are you able to wait for 6 months before you can access money? That is a problem. The other challenge is the fact that you will borrow a factor of your savings. Most SACCOs will give you 3 times. So how much as a small startup have you been able to save with the challenging environment to be able to borrow substantial amount that is 3 times of whatever you have saved? So those challenges now are weighed against borrowing from the bank that may be able to give you the money instantly without having to wait for a period of time, but you pay that through the interest that you pay to them. So that's a decision that you will have to make. Can I wait? Do I have these? And all that. Together with now the question of the security. For the bank, you must have a security. Well, of course, even in the SACCOs, you have to have the security. But in the SACCO, you may most likely have the security in the form of your colleagues, your friends who guarantee you. In the bank, if you're not employed, then you will have to bring in some collateral. It's a process. So those are things. Yeah.
Oh, interesting. You've brought in some aspects, and I'm coming to you on that because I've seen a question on security. Please, if you're coming now, kindly drop questions on in the chat so that I can be throwing them to the panelists. We may not hear everybody ask a question. So if you can drop the questions as a chat, I'll be able to pick them, and even the panelists are able to pick the questions. Mr. Thuku, I'll come back to you on the point of saving. I saw someone write somewhere, the biggest lessons people globally have been taught by COVID-19 is to save, because many people were caught flat-footed without savings, and they did not know. Actually, they are just stuck. And I'm coming to that question of how can an entrepreneur save? Let me throw this back to Mr. Javier. There's this question coming in every time of security. We know the bank. I mean, the reason why many people are going to Shylocks, to Tala, to Mshwari, to these other branch and all that, is because the bank makes it so difficult, that is perception of the entrepreneur, to access the loan. Even when they say we are lending, even after advertising, you take your books there, take your business there, they will actually ignore you for some time. These are experienced people have the bank. What is the problem? Number one of the security, and then also why is it difficult?
Can you hear me?
Yeah, very clearly.
Yes. So the first thing you need to do, you need to define who you are.
To define who we are. Some volume again, just maybe raising our volume.
The first thing you need to do is to define who you are.
Who you are.
Are you a person? Are you a business? Are you a company? Define that to the bank. Are you maybe you can say I'm a social organization. Define who you are. The bank has to know who you are, the first thing. So most people, when they go to the bank, they don't define themselves. Second, make sure you are right with the government. Make sure you've paid your taxes if you have to pay, or if you explain to the government why you're not paying your taxes, and they have given you that waiver. Because
be clean.
There's no way you can be clean. Don't go to a bank when you have an issue with the government, because the bank will tell you, we do not want issues with the government. Importantly, you need to understand why. The question is always why. Why are you borrowing? So you tell me, I want to borrow to bring in or to buy a car.
Okay.
The bank will tell you, get us that logbook, get us the buyer to do a sale agreement so that we know what you're buying. And from where you're coming from, tell us how you're going to pay for that car. Tell us where the income is coming from. For them, they're just doing basic mathematics. I think most people do mathematics, they understand. There is no way, or accounting. I don't know, me, I'm a lawyer. Tell us where the income that will pay for the loan will come from. You understand?
Okay.
So the banks will sit down with you and tell you, like people who have a salary, it's very easy. Like it takes 2 days or less to process a loan for somebody who has a salary.
Okay.
It takes 2 weeks to process a business-based salary. It takes 3 months to process a mortgage.
Okay.
The only reason why it takes 3 months to process a mortgage is because they have to process the security. But a security in a bank is never the first priority. It will never be. Because they're in business. They have money, they want to put this, it's just like gambling. How do you gamble? You're told Chelsea is playing at Arsenal. Will you put your money there? No. But when they tell you Chelsea is playing against a team like Bournemouth, you'll put your money there because you know Chelsea will win. That's what banks do. So they'll look at you, they'll tell you, so what business are you in? They won't matter. Okay, actually, it doesn't matter what business you're in. They'll ask you a very simple question. For the last 6 months, how much have you been making? You will not be able to answer that. The only way you will be able to answer that is by showing your bank statements. Now, my first advice now, that's why I came there, is make sure if you are doing business and you want a bank to finance you at any one time, bank your money.
Bank your money. Please take that note. Bank your money.
Bank your money. Use M-Pesa to your account, whatever process it, but make sure before you pay a supplier, before you pay anyone, before you pay somebody you've hurt, just bank that money, then use that common account to do whatever transaction that you want to do. You understand?
I get
Yes.
you. So
Yes.
that's a very important point. Please,
Yes.
I
bank
want to,
your money.
I wanted you to tell them again. Then you pay your bills the following day.
From that account, from the account which you banked. Because when you're going to look for money, they will ask you for statements and you'll show them those accounts. And you'll tell them, at this particular date, I received this guy. This guy had a lot of trouble with me, but he paid me. So I have an income of this money, I pay this much. So when they do the mathematics down there, they will know you're receiving more than you're paying. Then they will think, yes, you can service our loan.
Beautiful. Thank you. Kindly, I want to repeat again, drop your question. Let me hear what you want to, the panelists to clarify on the chat list. And I can see quite a number of questions. Javier, I'm coming back to you on the question of LPO. How do you finance LPO? Let me go to Mr. Duku and maybe where you left, just ask, someone is asking the different or the best way of saving your money. Let me just ask, Steve Mosila is asking on savings, what is the best saving plan stock account? And maybe that one will be answered by Javier also when it comes to banking. But Mr. Tuku, you can also chip in on how do you start saving your money as an entrepreneur when it comes to the circles?
Okay, thank you very much. Now, saving, we need to understand savings deeply, in the sense that we don't save for the sake of saving.
Yes.
Saving has to be saving with a plan and with an end. Actually, if you had investment and you can invest all your money, I would say never save. Don't save. Invest. Unfortunately, our income most of the time is in bits and pieces that are not able to get into meaningful investment, such that you'd have to wait to accumulate so that you get enough to be able to put into meaningful investment. So the end game should be investment. You are making your savings so that you collect and put together. You piece the small pieces together to form a sizable chunk that can be able to get into a meaningful investment. So that should be the bottom line. So you're not saving so that you can be able to say, I have saved so much. This is because actually, when you save your money, and this is very interesting, when you save your money and you put it in a saving, it is actually losing value. You're wasting, you're losing. When you save your money for a number of years so that you can accumulate, let's say you're accumulating 10,000 per month, for a whole year you have 120,000, for 3 years you have some 360,000. The bottom line is that the 10,000 that you saved the first month, that is 3 years ago, is not the same value as it was when you saved it. Its purchasing power is lost. If you are saving so that you, for example, you construct, that 1,000 shilling that you saved 3 years ago would have more cement than it will buy when it has now been accumulated and you want to invest now. So investment is not, saving is not actually the main thing. It is just that we do not have any other way of getting this money so that it can be, we can be able to utilize it. And actually, if you ask me, this is my advice. Instead of saving, you should borrow. Instead of saving, borrow. When you borrow, now you utilize your money in advance and you make use of it when you earn it, such that you are spending your money at its optimal value. And I think that is something that we shall drive at, we can drive at shortly after I have gotten back to the saving. So actually saving, if you ask me, saving is a bad thing. It is just like we are told, democracy is the worst form of government, only that there is none that is better. You know.
So what you're telling entrepreneurs tonight is,
yes,
please borrow. That's what
borrow.
you're telling entrepreneurs.
Yes, yes. This is basically what I'm saying is this. If today you borrow 360,000 and you say you will pay in the next 3 years at a rate of 10,000 per month, actually you have redeemed the value of your money, unlike the person who saves for 3 years, because by the end of the 3 years, the value of whatever you will have done with that money is bigger, much bigger than the value of that money. So you actually have grown your money, but the person who has saved has actually lost the value. So saving is just a necessary evil because there is nothing else we can do. But if it is possible to borrow, go and borrow.
Interesting. You know, you remind me something you mentioned somewhere in our training, and
yes.
You said if you borrow 10,000, you are a problem to the bank. Is it?
Yes.
Please. And if you borrow 300 million, I think the bank is. I don't know. You said something to do with that, and when you're telling people to borrow, it's like the people who have borrowed big money. Actually, you know, better than us who are not borrowing. People are risk averse. They are debt averse. Sorry, that means they are debt. They don't want to borrow because they have also been put on CRB. And
can I request that you give me just some 3 minutes?
Go ahead.
I drive this point of why people need to borrow.
Please do. Please
okay.
do.
I know most people are afraid of borrowing because they are afraid of loans and all that. But what I've said is that it is important to borrow instead of saving. If you can, you should borrow. Number one is because our income grows slower than the cost of investment. I have dealt with real estate, and what I've found is that if you borrow today, say 1 million, you will be able to buy that plot. And that becomes the basis for your investment and future growth. However, if you say you will save your money until you buy that plot, and you are saving even at a rate of say 50,000 per month, which is not possible for many Kenyans, that means within 1 year, you will have already accumulated some, say 600,000. You are still far from 1 million. The following year, you get to 1 million. But by the time you go back to the same plot that was worth 1 million 2 years ago, it will be worth 1.5 million. So by the time you accumulate another half, it will be worth 2 million. By the time you get 2 million, it will be worth 4 million. So you're running after something that is running faster than you. However, if you go and borrow and make that investment, you arrest the appreciation such that the appreciation is no longer against you, but it is appreciation for you. And it is the same thing with the rest of the economy. I've just given that one example. So our income grows slower than the cost of investment. Number two is the time value for money, as I've mentioned. You know, when you put your money in that account, you are saving so that you make your investment. That money is losing its value. It is losing its purchasing power. That 1,000 shilling that you have saved from month 1, 3 years ago, what it was able to buy then is not going to be what it can buy now. So it has actually decayed and lost its value while it is in the store, in your hands. Unfortunately, if you wanted to build, you cannot buy cement and keep it for 3 years waiting for it to be used for construction because you didn't want to buy it at, at an expensive price. Yes. The other thing is the fact that when you borrow, actually what you do is you take a walk into the future. And you borrow the worth of your future because you're actually borrowing against your future income. If I take a loan today, for money that I will pay for the next 4 years, what it means is that I have worked for the next 4 years, month by month, and picked my income like 10, 20, 40, 50,000 and accumulated it and brought it in today and spent it today. Meaning I will have done some work with it. I'll make investment with this money way before I earn it. And by the time I earn it, the value will be lower than today's value. Meaning I have actually spent my future earnings at today's value. So it is a walk into the future, plowing in the future income, bringing it to today and spending it at a value that is higher than the value that I will earn it at the time I earn it. There is also the question of the insurance that I have mentioned. It also means that if in case anything happens to you, your investment, as long as you secured and you insured the loan, whatever may happen to you, you will have already secured that future. If you took some 5 million, you made an investment, then something befalls you. If you will be disabled, you have that investment to take care of you. If you will go, the family will have something. So in essence, it means to your family, you will be alive financially, economically, way beyond, because you went and brought in the future income. And that way, it means you have secured them. And the other thing is that we know whether you take it or you take a loan or not, you will still pay a loan, because every human being alive pays for a loan. It means if you can be able to take a loan and help yourself to do the things that you can be able to help yourself instead of relying on others, then you will be paying the loan as your loan. Today, if you take a loan and maybe you have constructed your own house, you will be paying that house using the rent that that you'll be paying to somebody else. I am a landlord today, and the people that are occupying my house is actually the ones who are paying the loan that I took to construct that house. So they are paying a loan that they never took. I took it on their behalf, made the investment, they are paying, and eventually the houses will be mine. So whether you take a loan or not, you will still pay a loan. Whether you have gone to a supermarket and made purchases, you're paying somebody's loan. You fuel your vehicle, you're paying somebody's loan. You use a matatu, you're paying a loan for somebody. And so it's something that we shouldn't run away from. It is something that we should immerse ourselves into and take it boldly with a purpose.
Fantastic. That's so profound, Mr. Thuku, and someone is even clapping. Let me, Javia, Thuku says it's very important. I mean, you're paying a loan if you're not, even if you've not taken a loan. And please tell us, when it comes to the bank, and I think these are discussions that we had before we went to Mr. Thuku. There are people here who want to take a loan, and especially now that the government has given young people an opportunity to do tender, to tender and get businesses. How can they go about LPO financing and even financing their tenders? Kindly.
Now, as I've told you before, don't take a loan before you know how you can pay for it.
You're right.
That's the basic principle of banking. Any bank you walk into, they will tell you, so, okay, you want 100,000 shillings. How are you going to pay for it? I want to speak in the simplest possible language that everyone can understand. Yeah, so if you tell people you want to borrow 5,000, and then you approach a bank will tell you that we're going to give you this loan at 7%. So you add 7% of the amount the bank is going to give you. And then you have to ask yourself how you're going to give yourself income to pay 5,000 plus 7. Yes. So anytime you walk into the banking building, there are always two types of people. And I'm going to attack the bankers. There's someone who wants to give you money, and there's someone who wants to meet the targets.
Okay.
Yes. There's someone who wants to meet the targets. They will tell you that, oh, habari yako, mzuri, what do you want? So tell them, I just want to open an account and get a facility to finance an LPO financing. You understand? But you will meet someone who will tell you, tell me about your LPO financing, so that they can go around it and understand the value of it, so that they can actually estimate how much you're going to pay back to the bank. Then they can give you the loan. You understand? Yes. So it's never, it's not a robot mathematics. It's never a robot mathematics. It's just you and them talking.
Yeah.
So anytime you see people telling you, oh, mimi put a loan for bank, then you go and try, then you get, maybe he has a friend there. But my perspective of banking, and I've worked through it, and I know it works, is bankers, or anytime, they need to understand what you need. Once they understand what you need, for instance, you come to the bank and tell them, you want to construct a house. They will tell you, show us your plans, show us your engineer's plans, show us your architectural plans, show us your, you know. If you show them everything, then you're good. If you don't show them that, then they'll be like, who are we financing? So if you go back to the LPO, it will be the same thing. Which government authority is it financing you? They'll go to the extent of asking that government authority, are you financing this LPO? If they tell you we are financing this LPO, are you going to pay them? After how long? They go to that extent. So once you tell them, this is my LPO, they're going to finance over this extent, then get the money after this long. Then the bank will be paid back. What most people go through is this. As Kilonzo, you're given an LPO, still, because you know someone in government, right? You go through a broker. The broker says, I have money. Then the broker goes to another person. That other person goes to the bank. This person who goes to the bank cannot explain your LPO to the supplier. You understand? So there's a very big breakdown in communication between the LPO provider and the financer, who is the bank.
Awesome.
Understand?
Awesome.
Yes.
Awesome.
So
awesome.
that's where now people now get it wrong. If you go outside here, the people like, mini kona LPO. People are walking around saying, mini kona LPO. Niko na LPO ya kuuza hapa mavitabu. I have LPO ya kuuza hapa notebooks. I have LPO ya kuuza hapa nini. But they don't know how to approach the bank. If you have the LPO, carry the papers you have for the LPO, go to the bank, sit down with your bank and tell them, this is my LPO, so tell me. The only thing the bank will ask you regarding from where the LPO is coming from will be two things. Do you have the security for the LPO? That one is secured. Forget about the loans. If you don't have the security for the LPO, they'll ask you, can the payer, the person who's going for that, to pay for that LPO, can that person give us a letter or something to secure that LPO to you? Once that is done, you have the money.
Okay.
Yes, and put it in your own consideration.
Beautiful. Beautiful.
Imagine it's your own money. Yeah, just imagine it's your own money. What will you do? What will you do? Mimi, if I come to you and I ask you, give me some money, I want to pay for my LPO, what will you do?
Right.
You will tell me the same thing. Uyo mtoto anlipa aje. Muite, call him to come and confirm for me that he will pay me direct, then I'll pay you the difference. True or false?
All right, exactly.
That is what I'm talking about. So the banking business, people will want to complex it. It's not complex. It's not complex. It will never be complex.
I want to throw one more question to you, Javier. And just before I throw the question, let me just go through the comments quickly. I see how can you get a loan from a SACCO? I think that one has been answered by Mr. Tuku.
Yes.
Isaac mentioned, what does a startup entrepreneur do when has no money to pay, right? That one will be answered. No, we started with that actually.
There's a question by Patrick here.
Yes.
Can I answer it?
Okay.
Yes.
About is it advisable to take money out of your business? Is that one?
Yes, that one.
Okay. Yeah. Please go on.
Is it advisable to take money out of your business to finance personal projects like building a home? So the first thing I say is that building a home is not a business.
It's not a business.
It's not a business.
Okay.
Yes, you're building a home. I would advise the money that you are building a home with to take it to business. I would advise that. Yes. So I think I can reverse you to a scandal that happened here in Kenya. It's called GTV.
Okay.
Those guys woke up on a Sunday and then they disappeared. We've never heard about them.
Okay.
That means they're working on facilities. They're working on bank loans. They're working on facilities. They were not worried about their homes. They were not worried about anything. So these guys just took whatever it is that they had, then they walked away. So the first rule of doing business, if you're doing business, make sure just go to a financer. Don't use your money. Show the financer your money. You have to show him. You have to show how you use your money. Where your credits, where your debits. Show the financer how you use your money. Then let the financer give you his money
to build.
Yes, so that you can do business with it.
Oh, okay. Okay, beautiful. That comes out very clearly. I'll come back to you, Javier, on and I want you to tell us about, you're a lawyer, an advocate of the law of the High Court, and also a financial expert. There's so much talk about government, and I'm coming to you about that, on lowering interest rates, lifting CRB listing and all that. Please, this is a critical question that we would want you to answer before we are done. But let me go to Mr. Duku. And Mr. Duku, just a few comments here. Someone said, I'm afraid of huge loans, but Duku has changed my perceptive of loans. I think I wanted to say my perception of loans. Thank you very much. That's from Margaret. Thank you very much. David mentioned this, and let me just read through. This is in my inbox. That there are different types of banking laws, based on where we are, Africa, South Africa, Kenya, and all that. I think here we are on the context of Kenyan law of banking, or Kenyan banking law, and that's very important. Thank you for that. Then someone said, I fear taking a loan because of a bad history from other people. Please help. That is to you, Mr. Duku. Nice view about loans. Never seen it that way. I'm paying other people's loans. Yes, Eric, that is the truth. That's what Duku said. Profoundly explained. Thank you, Mr. Duku, for that. Yes, I think from here people are going to borrow. But please remember, you take money when you have a purpose for it. Remember that. Yes, so Mr. Duku, let me throw it back to you.
Yes.
You talked about you should borrow. If you're not borrowing, you are paying other people's loans.
Yes.
That is the truth.
Yes.
Tell us about how then does an entrepreneur wake up and go to borrow? But even before then, these SACCO loans, don't forget the question of security. Does SACCO require security? All right. There's a question about guarantee loans. That has been a big problem for many people. You tell me today, I should get 3 guarantors to get a SACCO loan. How practical is it? The person I go to, they have either borrowed or they have guaranteed other people. Please help us come out of that cocoon. Are SACCOs doing something differently right now, or how should people go about this?
Thank you very much. Now, as we mentioned earlier, whether it is from the bank or from the SACCO, you require security, because the person releasing their money need to be assured that this money will come back and that you will not run away. You know,
Okay.
most people borrow not with the intention of repaying. And repaying is painful. It's not very easy. You know, you earn your money and you have sweat and blood, but you cannot spend that money because somebody is waiting for it. So it's not very easy. And so every money must be secured. Now, the security ranges from the guarantors that would stand in and say, I know this person. And the guarantorship is not just the word of mouth. Because if it is just word of mouth and a signature, then anyone can sign. But the people who are guaranteeing you, they are saying, I have the word of this, and so I'm standing with, by this person with this amount. I have these savings in the SACCO, say 100,000, and so as Geoffrey want to borrow $500,000, my 100,000 I can guarantee him with. And then he will go to another person and another person, and the full amount will be guaranteed. So the point is, the SACCO does not now need to so much worry about know your customer, because all they need to know is the customer is known by others who have something that is worth and of value. So those people who says they trust you and they sign against your name, and they add your security. Now, unfortunately, as you've put in it, there are times that getting a guarantor is very difficult, and especially if you're borrowing substantive amount of money, the substantial amount of money. And this being tricky, most SACCOs, just like the banks, have gone into using collateral. This is where you would bring something that is of value, like a logbook or a title deed, and they are charged, and then from there they are held as the security, so that if you default or you're not willing to pay, then this can be auctioned. Now that's a legal way that is very, very helpful, so that if you want some 5 million, getting people to guarantee you from the SACCO is very difficult. But if you have a logbook, you have a title deed, it can be charged and you'll be able to get that money. You go make your investment and you repay, and then you can redeem the mortgage. I mean, the mortgaged or whatever collateral that you have put as the security. So that's how most SACCOs are operating currently.
Oh, interesting. And just before I go to Javier, they say the devil is in the details. What are those blind spots people should avoid when they are going for a loan?
We've mentioned a number of things about borrowing and taking the loan and all that. So we've mentioned the question of who you are borrowing from. Is this a registered, recognized institution that government recognizes, so that you can enter into a contract with, because a loan is a contract. So if this is not an organization that is recognized, then an illegality would be happening. So if this is not legal entity that is recognized in law, then you don't get into any contract with them to do with a loan. Number two, you will be looking at the interest rates. So what are the interest rates? How much am I going to pay back with? And number three, there is the question of the insurance. So your loan is insured. In case of anything, then you are secure and you will be redeemed, or your people will be redeemed. Then from there, as I've mentioned, the collateral or the security, you need to get to ask yourself, what is that? And currently, and going by the Land Act, I think it is the Land Act 2012. Avenues for borrowing in such a way that if you put in your land as the collateral, then you have to go to the land control board, and your spouse must come in that land control board. They have to even sign the spouse consent. And many a times you are told, if this is where the matrimonial home is, consider not taking it as your collateral. But if the family is in agreement and they feel they are safe and you're capable of paying that, then that will be. But remember, it is not you alone. So you cannot walk in, take that loan against the will of your spouse, and then they are auctioned. You know, so that is something that need to be walked through very carefully, because there is implication on them. Yeah.
Beautiful. Are there bad loans and good loans? Someone has asked that question. I want to throw it to you even right there.
Yes, there are some loans that would call terrible loans. Mm-hmm. And any loan that is not going towards investment is a bad loan. And some people would take loans to go for holiday. You know, that is very bad anyway. It's terrible. So borrowing for consumption, borrowing for luxury is a bad idea. And borrowing without capacity to repay is a bad idea. So any loan that you would take for consumption, for luxury, it is not for an investment, it does not generate in itself, is a bad loan. Now, however, there are some loans that are not self-generating that we take. For example, for education. You know, you don't want to see your child in the village not going to school because you don't have money. If you have capacity to raise that money in the future, whether using farm produce or whatever, so you can take loan for education, that is an investment. Health is also an investment, because if you don't take care of your health, again, you cannot generate. In as much as you have not put that in an investment that you are seeing generating, but those are important things. So they may not be considered as bad loans. But for consumption, for luxury, it is bad idea. A good loan is that loan that you take for a project, it sinks into a project, it get into revolving and generating. So you put it as a seed and you grow it into a fruit and into a tree that you will be harvesting fruits from. So that is a good loan.
Beautiful. I'm coming back to you for one more question and final remarks. Let me get back to Javier. And this question of where are we now during and after COVID-19? And I want to put it very clear. The government is talking about moratorium for people who already have loans, right? What is that moratorium? Number two, the CRB lifting. You know, someone who was listed by CRB being able to borrow. Is it practical? Is it working? I mean, I've had complaints from people even before we started this program who are asking, I've tried to borrow, but they're still telling me you need to pay off to be, you know, freed from CRB. So please tell us, what has the government done in terms of loans for entrepreneurs? And what, are we again risking borrowing money? Because this is the point, Javier, before you answer. I will borrow 200,000 to boost my business, but then COVID-19 will not stay forever. That will still get, you know, it will be over. Are these low rates, you know, fixed rates, or are they going again to change after COVID-19? How can an entrepreneur be secured in terms of that? Please enlighten us as an advocate and also as an expert in financing matters.
I just have two simple questions for you. Very two simple questions.
Okay.
Personally, I have loans.
Okay.
Yes, so I called my banker. You understand?
Yeah.
My banker told me, I told my banker that it's COVID and I want some assurance that I cannot pay. They told me, no, apply, then we will have to appraise you
again
before you accept or decline.
Okay.
Yes. The process of appraisal is what I was talking to you about when we started the show.
Yes.
Yes. How much income are you getting in? How much can we pay you? That we have to go through that process.
So people should not be excited because it's, you know, this.
It shouldn't be. If the government was serious about COVID, they should do what the UK is doing. The UK is telling business people, come for the loans for the next 1 year. We'll finance your businesses for the next 1 year. If your businesses will do good, then after that 1 year, or the next that time after COVID, we'll consider if you're going to turn them to grants or we'll turn them to something else. They're telling the people who are employed there, we're going to pay 80% of your salary, so that for the next 1 year, don't worry about staying home. Stay home, we'll pay 80% of your salary. Then we will see what we will do after the term that we are being told we have a vaccine. You know, when COVID ends, it means we have a vaccine. Yes, if you have a vaccine, that it means whoever gets it after, it doesn't matter. But babies being born at that time, it's just like polio, the same thing. Yes, so let's not behave differently. Let's not push our financial market where it is supposed to be. Let our leaders behave the way they're supposed to behave. Let them do what they're supposed to do. We have the money. So let's not push COVID to them and tell them that the reason we are telling them to act the right way is about COVID. It's not. It's not. And I know Tuku is agreeing with me. I can see him shaking his head.
Completely.
Yes. It's business as usual. It's only that we have gotten a small hiccup. And our hiccup is COVID.
Okay.
Now, I'll give you an example.
Okay.
I borrow from Tala. Tala used to give me 30,000 shillings every month.
You're lucky. Go ahead.
Yes. When COVID starts, they give me 5,000. 5,000 is money for my girlfriend. So where is the 5,000 that I can pay rent with? Where is it? It's not there.
Yes,
so how do I run around it? How do I run around? That's the conversation we need to have.
Yes.
How do I round the 5,000 shillings? Do I need to go back and now line up in the bank line and tell them I have an income of this much and I have this security and I need to do this A, B, and C? Or do we need to have a national conversation? Your question is twofold.
Yep.
We can drop it at the national level or we can drop it on a personal level. If you drop it on a personal level, then I will call my girlfriend and tell them, can we put together our income so that we can go convince the bank that this is the much you can pay in a month. That's what banks look for. That is the only thing, as Tuku will tell you, that's the only thing that banks look for. Can you pay the repayment of the loan? If you borrow 100,000 and they tell you your repayment for the 100,000 is 6,000 per month for the next 18 months, can you pay the 6,000? If you say yes, they'll tell you, show us. So you have to show them the coup for the income. You have to show them. So you tell them, I always cook mandazi and I sell these mandazis and they pay me 6,000. So I can pay.
Business as usual. Everybody please remember, business is as usual.
It's as usual. This government, yes, it's business as usual.
Okay.
So don't hide behind COVID. Tuku, I think you'll just put Tuku on after me. He will tell you the same thing.
Yes.
No one is on your back.
Yeah.
No one. Okay. Yes. So we have to tell Kenyans the truth. We have to tell them that.
The good thing. The good thing here is that when you look at the way the government has behaved, it's just made pronouncements. These pronouncements are not obeyed. They are not followed until they are enacted and activated. And there are some pronouncements that are private that will not come to effect because the government is not putting that money. for example, the government declared that people should be paid salaries, and even private companies should maintain the salaries and all that. But the government itself is making its people to take pay cuts. You know, I've seen a number of institutions, even universities, are taking pay cuts. KU declared they are cutting by 40% and all that. It's because the government is not financing. So it doesn't have the capacity to finance and to support. So how do they take care of my loan that is with a private bank? And the private bank belongs to people who are looking forward to getting their dividends, you know, and money back for their investment. So there is no bank that is there to lose, and they will do what they have to do to make the money. Yeah.
Fantastic. Okay, ladies and gentlemen, we this show, in fact, someone is suggesting, can we have a part 2 of this show, because we are already past time, and we have to end the show. There's so much that Javier, I know you have. There's so much Mr. Duku has. Mr. Duku has not even given me the formula. Mr. Duku, the formula of getting to 6.5% interest from SACCO, I still want to hear it. Javier, we still want to hear. What is this moratorium? How, I mean, and then also the process, the step-by-step process to approach the bank and all that. And then CRB question, there's so much. We have to end the show. I want us to get 2 remarks from Javier and 2 remarks from Mr. Duku, your parting shot. What is your advice to entrepreneurs? We have 31, 30, we had 32, we are now 30 people watching you. 30 people want to hear, what can I do? It's COVID-19, how can I get myself going in terms of loans and financials? Please, two points, Mr. Javier, then I go to Mr. Duku.
You know, the problem, you're talking to me and I'm looking at the comments.
Yeah.
So,
yes.
So let me ask you, can you just have 1 or 2 questions from the crowd? Let's just 1 or 2.
Okay, then Ms. Javier says we have 2 questions, or even comment. This time I kindly lift your hand. I'll be able to see. Please use the technology. You can lift your hand using the Zoom app. Then I'll pick you to either ask a question or comment. Let me hear from Mr. Duku. Do you have 1 point that you really want to tell entrepreneurs to do or not to do before we end the show tonight?
Okay, one thing that I would advise to do when taking a loan, we have talked about where to take and all that. Maybe my last one is how much to borrow. And how much you should borrow is dependent on a number of things. One, Javier has mentioned about your capacity and ability to repay. But there is also the question of what project are you running? What is it for? That dictates how much you need to borrow. And the answer to that question is borrow the amount that you require to finish that project. Do not take any extra. Do not take any extra, because that is extra that is going to waste and you will still pay for it. And do not take less unless you have somewhere that you can be able to source that money to fill in the gap. Because this is where we find people having done projects that becomes monuments that are just white elephants. They are not complete. So if you take 5 million, you do your house and it is not complete, you cannot get in, it is not habitable, you cannot move on, it is now at the mercy of the environment, the rains and all that, you have lost. So if you take amount that will not complete your project, if you leave that project in a way that it cannot produce, you have lost. If you take money that is extra, way above whatever you needed, you have lost. So that is very important for an entrepreneur.
Fantastic. Thank you. Please drop your comment. Yeah, I think there's nothing. 2 questions, please.
Yes, just 2.
I had requested people to lift their hands. I've not seen anyone. I can see comments streaming through. Email, please. All right. Please, if you have a question, lift your hand. I have 1 minute to go so that we can close All right. Drop me your email address, your comments or questions. We can always get to Javia and Gideon. Please, sorry, and Mr. Duku. I'm going to open this, to do this another time. I will have a part 2 of financing. There's so much to discuss about. Let me see whether there's a question here. No question.
Look
Please
at what
remember,
Musila is saying.
Steve Musila, okay.
Yes.
Yes,
Oh yeah, Steve, I can see you. Go ahead.
Yes, I had asked a question earlier about. I'm told that it's possible to negotiate on the interest rates at the bank, and also as well as when things are not so good with business, you can also negotiate with them on them taking you to CRB and everything. How practical and applicable is this?
Okay, Javia.
Steve Musila.
Yes.
One, let me just give you straightforward answers. Leo, so itakuwa sawa?
Sawa sawa.
Okay, one, you can negotiate your loan. Immediately the bank understands you have the money to pay the loan, they will hear you. Two, right now, no one is being taken to CRB. So if you have a loan that is being taken to CRB, just shout, even on Twitter. Itatolewa kwa mbio sana. You understand?
Yes.
But the thing you need to understand about credit is this. Where did you borrow? Approach your borrower and have a discussion with them. No one will take it. Just approach your borrower. I don't think you understand me. Is it a circle? Yeah. Is it a bank?
Yes.
Just approach them. Just if they call you, just tell them. If somebody calls you, just tell them, which branch are you? When you're receiving that call, just ask, which branch are you? When they tell you, I'm in this branch, just tell them, can I come? Then they tell you, yes, go to the branch and then tell them, this is my position, I cannot pay the loan, I cannot. But the important thing that you just mentioned there, I can see even your question, is about CRB. And this CRB is coming with COVID, so you're lucky. If anyone lists you around this time, then they're going round the government's law. The government notice by the Central Bank of Kenya, by the governor, has already been passed. We are not listing anyone. No bank is listing anyone. Okay? Are you there?
Yeah.
Yes, I am. I have muted.
No bank is listing anyone on borrowing. No bank is this. If a bank lists you, get my number, I'll push them out. But no bank is listing anyone.
Share the number.
Javia, please. Javia will share his number. He's a lawyer. Yes. Yeah, and he can defend you in the law court. Please, thank you very much, Geoffrey. Thank you very much, Mr. Tuku. It was such a pleasure having you on board. I've seen quite a number of people, all of you. It's already 5 minutes to, actually a few minutes to 11. I've seen someone saying we should have this for 2 hours. I totally agree. Just that we have to find where those 2 hours are.